Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now the major focus this week, US inflation numbers on Wednesday, right? Key to the next direction or the next leg of direction for the US dollar. So we want to be watching that very closely. On the hourly charts, you're starting to see the dollar sort of drift a little bit lower, right? But it's not uniform, right? Bit of a question mark over what the BOJ are going to do. So that initial downtrend we saw in dollar yen like a week ago has really stalled and is trading sideways. Dollar CAD still trading topside. And that's because the commodity currencies, right? CAD, Aussie, and Kiwi are getting pummeled. You know, these tariffs that Trump is putting on China, China's economy, it's really going to discombobulate the Chinese economic conditions, right? It's probably a long time coming, but that's going to impact those specific currencies, right? So they are doing something different to what the dollar's doing, right? So euro's going up against the dollar, sterling's going up against the dollar, but there's a question mark over does the Aussie and Kiwi and CAD follow or not, right? They're sort of caught up in that other sort of almost a geopolitical situation, I should say. All right, so that's where we are. Now, there's a couple of things, right? I'll come into the US numbers here in a second, but if you have a look at the central bank calendars here, we've got a bunch of central banks coming up. RBA Tuesday, Bank of Canada Wednesday, Swiss National Bank Thursday, as well as the ECB, right? Now, you look across here, you'd usually be sort of frothing, thinking there's some great opportunities here. Well, 80% chance of a cut by the ECB, that's largely factored in. You've got the Bank of Canada, 84% chance of a 0.5% cut, right? Aggressive cutting, but factored into the market. We've got the RBA unchanged, right? Almost at 90%, so nothing to sort of look at there. Where we do see a potential reaction here is the Swiss National Bank, right? There's a 0.5% chance or 57% chance of a 0.5% cut. Okay, so they are going to cut. It's just a matter of whether it's half or 0.25. And that's the one that's probably going to give the markets an initial jolt of direction and momentum. So Swiss National Bank, something to look at. Now, if I come into the numbers, right, we come down. Actually, let me just go to the calendar and I'll just give you a quick run through as we go through here. So Monday, really, okay, the inflation numbers out of China, it may be too early to sort of see an impact, but the numbers have been exceptionally weak, right? That's going to impact Aussie, Kiwi, and CAD. Aussie and Kiwi in particular. Tuesday, we've got the RBA, no change expected. Now, I see a big catch up from the RBA coming up early next year where they start cutting super aggressively. They seem to think that Australia's isolated from, stalling markets, but we'll wait and see what happens there. But Monday, Tuesday, largely down to sort of Aussie, Kiwi, China. There's not a lot to come up. So first couple of days, good days to get your charts all tuned up. Then you come into, it's Wednesday in the US. You've got the inflation numbers, right? 2.6% year on year. Forecast is 2.7. Actually, if I dig a little bit deeper here and just go into our data, we can have a little bit closer at these numbers. I was just going to say, like, this is the major number that we're hoping to see some sort of direction, right? And it will give us good trading conditions if we get some sort of outcome here. All right, so the year-on-year number forecast is 2.7, 2.6 to 2.8. Now the market is sort of under control. You find the ranges for the forecast for inflation getting tighter, right? That makes it easier for us and the rest of the traders, particularly the banks, to identify, is this number stronger or weaker, right? The Fed, 85% factored in, they're going to cut rates by 0.25 next week, but this will be go some way to giving us some sort of dollar direction. So make sure, if anything, you factor this in. If you've got positions open, make sure you're having a good look at what's happening around the time of that CPI release. Now, US Treasury yields just taking a breather, right? That big rally in the yields, I wouldn't say it's completely over, but it has stalled and the yields are just coming back to sort of some sort of normality. Is that giving us clear direction across the currency pairs and equity markets? Well, equities it is, but the currencies, as I said, there's bit of a geopolitical situation with China, right? So Aussie, Kiwi, CAD are getting, or they're under pressure right now. They are sort of just sort of bouncing a bit at the start of the Asian week or the start of trading for this week, but they are still lagging right behind euro and sterling. So with the ECB, you'll be watching euro very closely this week. Obviously, with the inflation numbers, the ECB, it's a good matchup. If we get a one up, one down situation, we could see a decent move in the euro or the dollar for that matter. Okay, so that's where we are. You don't need to overcomplicate things. If I just come down back down to the calendar, you look through the week, right? You get into Wednesday in the North America session. Okay, it really kicks off with the US inflation numbers. Then we've got the Bank of Canada. You've got the ECB on Thursday. If I just clear that. And that sort of pretty much does us for the week. Okay, don't forget the Swiss National Bank in there. They sort of sneak themselves in, but they can have an impact, right? So it's a bit of a question mark whether they cut by 0.5%, as I said. So keep an eye on the Swiss National Bank. It will have an impact on the euro, depending on what happens there. You've got the press conferences. You've got lots of things to mull over. Thursday, we've got the Aussie employment numbers, but the focus will be the various central banks, right? We're just going to roll through. As I said, the Bank of Canada could potentially be going by 0.5%, another aggressive cut. That's going to be on the radar there as well. So we get dollar direction first, and then we get the central banks, right? So there's plenty to look at. Just don't overdo it. What I mean by that is don't overthink it. Just see what the central banks are doing. Okay. Once they give us the answer, what to do becomes easier. So try and pre-plan it. You can have a look at the interest rate probabilities and see what is expected, because if the move is against what is expected, that's the direction these things will go, right? I'll cover it closer as we go through the course of the week. But Mondays, get your charts tuned up, right? There's, you know what? There's a lot to be done with just having levels on your charts tuned up. It allows you to make decisions where pressure points are in the market, and obviously combine that with the bull bear pivot line. You can easily tell where these instruments are going, and you can prepare for the next move. That's what we're looking for. Okay, we want trending markets. Be great to see the US dollar give us some numbers, right, to really work with. Right, when the US dollar is trending, making money is a lot easier. All right, so non-farm payrolls, just to sort of come back across that. Okay, so a little bit better than expected. The unemployment rate slightly worse, so better. Non-farm payrolls, you know, the forecast was 4.2 for the unemployment rate, slightly higher than the previous number, but all in all, nothing, no real surprises there, right? So I think with the unemployment rate just blowing out a bit, that's why the interest rate probability for the Fed sort of firmed up a bit. Okay, the cut still needs to happen. It's almost 85% chance. So that's where we are. Let's see how these central banks roll, and we'll keep you informed as we go through the week. All right, guys, have a good one. All the best. Cheerio.